I'm cutting back on something else.
Yeah.
If I have to spend extra on finding alternative power solutions, then it's the same thing. And it's the same thing for business as well.
The Strait of Hormuz has had an effect on the price of oil. I think I read somewhere that in order for Cecil's oil business to break even, the price of
the mere fact that
very
you have a lot of people that you can look up to that actually have a similar background, potentially have a similar education that you have,
and who they are, more to a tech-driven business bank. Obviously, not forgetting the identity. Remember, we spoke a lot about identity. Shoprite has retained its identity. Having
to tap into outside of South Africa.
But what has changed though? Because I mean, think about it from a strategy point of view. There was a strategic decision to divest.
Background you have, right? It doesn't matter whether you're a doctor. It doesn't matter whether you're an engineer. It doesn't matter whether you're an accountant. I think it's forgiving in that sense. The only thing that is required is the willingness to learn and the willingness to, and the attitude to win. Because ladies and gentlemen, welcome to our new home. We are shooting live from Johannesburg, in the heart of the most expensive square mile, isn't it? Or the richest square mile.
No,
that's Centre. But anyway,
yeah, I know you butchered that one. Yeah.
Okay, let's repeat. Joking.
Nah.
How you doing? How you doing, my brother?
I'm good. I'm good. It's good to be here in Johannesburg.
Yeah.
Bittersweet. Sweet because a lot of the companies that, well, some of the companies that we are going to speak about here started here.
Yeah.
And this is where it all started for South Africa's biggest asset over the last 150 years, which is mining. So it's nice to be here, the city of gold. Egoli.
Which is not my home, eh?
It's not your home. Yeah. But it
you
is
followed me to Cape Town and then I ran away and left you there.
Yeah, you did. And I don't regret it. And that actually speaks to the other part, which is the bitter. So the sweet part is the sentiment, right?
Yeah.
But the bitter part,
yeah,
I'm not impressed. When I drove here, I was like, no.
The infrastructure is bad.
No.
Yeah.
Something is not okay.
No, look, luckily where I stay, I've never actually experienced water issues. But quite a lot of people, every now and then, like every second week, there's water issues and all of those things. But I've never experienced water issue.
Yeah.
I'm quite lucky. Yeah?
And I think the thing with, I mean, it's going to cascade down to what we're going to be speaking about with these companies. They operate within this ecosystem.
Yeah.
And this ecosystem, it needs to be conducive for growth. Can't be complaining about water, about road infrastructure, about safety. I mean, come on.
It erodes the disposable income of customers, right? Because if you look at it, if I have to spend extra on security, that means I have to cut off on some of the things. If I have to spend extra on finding alternative water system, that means I'm cutting back on something else. If I have to spend extra on finding alternative power solutions, then it's the same thing. And it's the same thing for business as well, because the cost of doing business becomes really high just because they now have to find solutions for energy, for all these other things. On top of that, this war has brought in increase in petrol pricing and fuel pricing. There's a lot that is going on. But anyway, I guess we'll unpack a little bit about that.
But yeah, I'm good, man. All is well. I'm still enjoying Cape Town.
Wonderful.
A lot has happened professionally, personally. But
congratulations on your promotion, guys. Dear investor, we have a manager here.
Hey, thanks, man.
He's managing things there.
No, it was really, really good. I was telling you offline that it's nice. Well, it's interesting. That balancing between managing work and managing people. But and I think both those two things require two different set of skills and even different set of mindset.
I agree.
But it's amazing. I'm enjoying the work that I'm doing. And you, professionally, what's been going on? You moved officially to Johannesburg.
Yeah. And that's been a year. As of yesterday, actually, it's been officially a year.
For real?
Yeah.
Time flies.
Time flies. Time flies a lot. But I think I was actually telling my boss when we were having a catch up, she was asking me, how has Joburg been? Right. So I'm like to her, the one thing I like about Joburg is that there's a lot of representation for us young Black people.
Yeah.
Right. And you cannot discount the value of that.
Yeah.
The mere fact that you have a lot of people that you can look up to that actually have a similar background, potentially have a similar education that you have, and all of those things, it kind of like makes you want to work hard, knowing exactly where you can get. As opposed to Cape Town, where the person that I'm looking up to doesn't look like me, they don't have the same struggle and background or similar background that I have. So we cannot relate, right? I'm not saying you cannot look up to a different person that looks like you. Sure. But I mean, I think it's a little bit better when you actually can look up to someone that have a similar background.
Yeah, no,
it's about relatability as well.
You're spot on. And I think also the geographical location of Johannesburg, it's so central.
Yeah.
It's close to KZN, it's close to Limbs, it's close to...
Exactly.
And, where I am, I feel quite far.
Yeah.
Obviously, we're there for a purpose, that I believe is a God-given purpose, me and my family. But yeah, pros and cons.
Of course.
But all is well, man. All is well.
That's good.
I see you got the Bafana jersey.
Yeah, I've got Bafana jersey. Yeah, happy and excited and waiting for the World Cup. I think we're gonna do well, eh?
Do well. Let's do well.
I think we're gonna get out of the group stage.
Yeah.
I think just the mentality that the guys actually have, of working until the end, not giving up. I think we're seeing a very different Bafana than we've seen in the past years.
I would agree.
That's why we didn't qualify for a lot of competitions, because the mentality was not there.
That was painful.
But the fighting mentality that I've seen, even just the players that have not made for the squad, they fight to get into the squad. Even the players that are in the squad, they fight to keep being in the squad.
Yeah.
So you can see the mentality of actually working hard for the national team. And also the league has improved quite a lot.
It has.
There's a competition. I mean, there's Sekhukhune is in the mix. Kaizer Chiefs has come back online. Orlando Pirates is going toe-to-toe with Sundowns. So you can see the improvement is actually translating into Bafana as well.
Level,
So let's see how it goes. I think I'm very confident this time around, as opposed to...
I was telling my one mate the day before yesterday, 4 points, I think, for me, will do it in the group stages.
Yeah.
Playing Mexico, Chechnya, and South Korea.
Yeah.
4 points.
Yeah.
A win, a loss, and a draw. For me, that's
what we need.
That's what we need.
Yeah.
And I think the first game is going to be against the host.
And it's going to be tough.
It's going to be so much pressure. But I think we need a result there. I think a loss in that first game
will affect our confidence.
It's going to make a big difference as to whether we're going to go through. But I'm confident. Well, I'm cautiously optimistic.
And what about Arsenal?
I'm confident that we're gonna win the league.
You think so?
Yeah, I do.
I think you're gonna. I don't think you're gonna win it.
I think so. I've been telling guys like from the beginning, that this is not going to be. We're not gonna walk away, like walk across the league.
Yeah,
walk away to winning the league rather.
Yeah.
It's gonna be a fight to the very, very end. I think we might, if we win the league, we're gonna win it either by a point, not more than 2 points, or even goal difference. I think it's gonna be that close. But yeah, I think we're gonna put
Let's see how it goes. Because I mean, I think the goal difference are pretty much at par right now.
Yeah.
So it's gonna be, and you know how City it is towards the end of the league. I think they just have this fire somewhere.
No, they do.
You know, but let's see. I wanted Arsenal to win.
Yeah.
I didn't want City to win, and only for one reason. I think they've had a very terrible season, and for them to win at least 2 or 3 trophies in their terrible season, that says a lot about the counterparties, right?
Farmers League.
Yeah.
it's farmers.
So I'm just like, no, man. Another team needs to take it. And
right.
Man U, I think we're gonna be in the mix next season. But now we're becoming next season FC now.
Are you guys gonna give him a contract, Michael Carrick?
I think he should, but I don't think they would. I don't think they'll give it to him.
But they should give him.
They should give it to him.
Why?
I think he's got a lot of, even previously when he was an interim coach, right? We saw that Man U was actually performing good, right? From a defense, from a tactical perspective, I think he's got it, right? And if we give him that room of being able to work with players that he wants, then we might get something out of Menu again. We might get the glory days back. Let's jump into the portfolio check.
Yeah, let's get into the portfolio. It's green. It is so green.
We haven't put the screenshots in a while. Hey? We need to start.
We need to actually show them because they might not believe us.
Yeah, man. Please tell the investors how much the total return is.
So since the fund started, we are up by 60%. 60%.
I mean, if we're charging fees on this thing.
Yeah, no, we're up. Yeah. Nothing can stop us. We're all the way up.
Yeah.
It's interesting, bro. I really wish that those who followed us in the beginning, or rather more people followed us from the beginning, because this is absolutely amazing. This is a great performance.
It is. It's more than great, my brother.
This is fantastic performance.
54%. Not even many funds actually reach that.
Yeah. We're in our second year, hey?
Yeah.
Second year, and we're nearly at a point where we're getting to the stage where we can even double our money.
Yeah, the money multiple is going to be 2 times now.
It's going to be 2 times, and this is a diversified portfolio.
Exactly.
This is not one stock. This is not one share.
I'm impressed.
And it's the important thing about having a portfolio. One of the things that we really champion here is diversifying, having a well diversified portfolio. We can get into that at a later stage. But yeah, so we have 7 companies, of which we have a very, very minority stake in, but it's a stake nonetheless. So from number 7, we've got Sun International, which is up 18.25%. 18.25%.
And the entertainment space being up 18%.
Yeah.
That's quite good.
It's fantastic.
Yeah.
Yes. So that's Sun International. Then we have at number 6, ShopRite. ShopRite, yeah. I've actually got an interesting. Well, I want to ask you about ShopRite because, it's up 24.57%, and it seems like it's been here for a while.
Yes,
but my view is that having a company at this size, with that large number of revenue and its business operations, and for it to be at this level, as far as the stock price, as a store of wealth, I think we can't get beyond our ShopRite. And I think why I would always pick ShopRite is particularly because of this reason. For me, I'm not expecting it to be at a Capitec level where it's, where the share price is up about 20% every single year on year. But what it's doing at the moment, for me, it's anchoring this portfolio.
Yeah.
That's my view on ShopRite.
Yeah. Look, I think obviously for them to be at a level of a Capitec, for example, they have to acquire some astronomical growth.
Yes.
Which means now they have to think about going back to Africa, right? They've won the local market.
Yeah.
And now it's about, they are big now, right?
Yeah, they're huge.
And they've been taking market share from everyone pretty much every single year. So right now what they need to focus on is there's only so much market share it's a finite number, right? So it's either the market grows or someone else drops out.
Yes.
So that's the only time you can actually acquire market share, right? And in that same way, I think they've won the market share part, and now they're focusing on managing cost and increasing margins, right? And because I don't think they can grow, like you said, I don't think it's sustainable to grow 20% per year.
No.
Especially if you're not expanding outside the South African market, right? So it's about having to manage that margins and having to reinvest. I think at some point they need to really look into going back to Africa, because the current the South African market is giving them
all that
it can absorb, right? In terms of the different players that are in it. It's similar with the banking environment as well.
Yes.
The market in South Africa is so competitive that you almost want to be at a very minimum cost to customer in order to actually grow at a very big growth rate, right? So that's why a lot of banks now are looking into Africa. Look at Absa now, the revitalized strategy is actually looking into Africa and trying to,
because they have a standard bank guy.
Exactly, right? So, but generally, the South African market is a very competitive market. It's well established. It's quite mature. So if you want double digits growth, you have to tap into outside of South Africa.
But what has changed though? Because I mean, think about it from a strategy point of view. There was a strategic decision to divest from Africa.
More specifically Nigeria.
Because of certain conditions.
Yes.
Have those conditions changed?
No, but I think they've learned their lesson. It's a different approach now. So what happened in the past is that they tried to formalize the Nigerian market, right? And they couldn't compete because a lot of it is informal markets, right? So I think they have learned, even in South Africa, they are competing in the informal sector. So you find those containers, ShopRite stores that are in a container things. So they've kind of now tested locally on how they can perform or compete in the informal sector.
So same conditions, different
conditions, different strategy and different approach. Sure. And that's how I think they can win going to Africa.
Fair enough. Good point. Then we have at number 7, number 6. Now we have number 5. Number 5, we have Naspers. Naspers is up 31.82%. Some robust growth there, especially for like the size, just the general size of this. So you have your sense of security in the form of blue chip, but you've also got robust growth in the form of high double-digit numbers. So, good stuff by Naspers.
Do you think the discount to NAV will ever be closer to
this question? Oh my gosh.
I mean, it's the fundamental question about Naspers, right?
In fact, it's a fundamental question of all investment holding companies.
Yeah.
Same thing with Remgro.
Yeah.
It was the same thing with PSG, to the point that it even drove PSG to delist.
Yeah. To unlock that value for investors. It makes sense, right?
It does, right? It does. So with Naspers, I think it's slightly different. They're too big.
Yeah, they are.
They're just way too big.
Yeah, market. I always say that it's an unfair company.
So I think it's a case of maybe I must be careful here because of
course.
In fact, let me stop there.
Okay.
But yeah, it's an issue of which they're dealing with. Yeah.
All right.
Yeah.
Cool.
What's your take on it though? You can expand on it.
Well, I mean, I think it's they've tried many different approaches to actually close out that discount gap.
Yeah.
I think it's just the nature of the business of being a holding company. The only way you can unlock is to just get rid of stuff, and when you sell off assets and stuff like that, and realize that value for investors, right? But for you to close it up as an investment holding, that's never going to happen.
Yeah,
right?
But like, I mean, you can always just continue driving operational performance.
Sure, but I mean, when you drive operational, sorry to cut you, but when you drive operational efficiency,
yes,
the NAV keeps on increasing and widens the gap.
No, but like, what widens the gap? There's one company in China that's widening the gap.
Yeah,
that's the reason why there is a gap.
Yeah.
Now, and this is all publicly available knowledge. If you look at the Financial Mail, there was a big spread just about it. So, the CEO of Naspers, his big ambition is for Tencent, the entire portfolio, for it to match the cash generated from the cash generated from business operations to match the dividends of Tencent. If that, it's an ambition, right? I mean, you look, stretch, but like, if you can get to a stage where your portfolio is generating that much cash as well, the dependency on Tencent in itself diminishes. Like, there's a different approach on how you can try to eliminate that discount. I think it's a prudent, especially when your portfolio is so big and so spread out, you would want to drive that operational performance to generate cash to match the thing that's actually causing the discount to net asset value. I think it's a good approach rather than just chopping and cutting.
No, I mean, it's obviously the last resort to sell off assets to realize value, right? Because you can still drive the value. And then at that point in time when you feel, okay, now getting rid of the assets would have been larger than you would have sold.
But that's the key though, hey? It's the looking at the portfolio x Tencent.
Okay.
That's
fair enough.
For any investor who's looking at Naspers, that is what you need to be looking at.
I mean, the thing is, I've never seen any investment holding company that has actually achieved that in terms of narrowing that gap, that discount.
Well, it goes up and down, right? I mean, Yeah.
Yeah.
PSG had the same issue with Capitec.
Exactly.
They couldn't do it.
But anyway.
So I say we hold Naspers.
Okay.
I say this is definitely a hold. Then we have number 4, which is British American Tobacco. British American Tobacco is up 59.2%. No, 59.12%, 12%.
But we got in very early at very low numbers.
It was red.
Yeah, it was a very low price when we actually got it.
Yeah.
But just a few points on BAT. So they've been complaining a lot in South Africa about illicit cigarettes that have been flooding the market.
Yeah.
So much so that they actually, I think they've got a factory in Helderberg. They've decided they want to close that by end of the year.
This year.
Yeah. So that obviously affects a loss of employment and all of those things. But they've been complaining about things like that they can't compete in those things, right? So because of that, but even so, BAT has been still doing well and has been adapting well in terms of changes in regulation with all those different products like vapes and stuff. But there's that one thing that they are going to close out. I don't know what the exact impact is going to be on the business size, but that factory is going to be closed.
Does that factor into your buy, hold, or sell decision?
Well, I think it's a hold. I would say let's hold for that. Yeah. There's still a lot of moving parts, right? And the market is in a transitory zone right now, and I think BAT is probably the best to back in the sector.
What are those reasons?
Philip Morris.
Yeah.
What's the other one? But yeah.
Okay. Cool. Cool. So hold, you say?
Yeah.
Then we have Valterra.
Yes.
We are not sitting far out of where the initial offices of Anglo American were first established, just down the road here.
Yeah.
So tell us about Valterra. 71.65%. It's fantastic.
Do you know that South Africa supplies about 80% of the global PGM capacity?
Repeat that again.
Do you know that South Africa supplies 80% of the market
80%
globally on PGMs?
Yeah. Of platinum group metals.
Yeah. That's how big we are.
Yeah. Wow.
But in any case, I think Valterra has seen quite a healthy recovery in the PGM pricings.
That's putting it lightly.
They have seen quite a lot of commodity boom in the pricing.
Yes.
And that has also outweighed their issues when it comes to export through Transnet ports.
That's it. And
that's how impactful it was. Because I think in the past year or two, Valterra was in the red for various reasons. Obviously the commodity pricing were depressed, and the logistical issues with Transnet as well. We had seen that problems, but right now there've been a lot of movements, even internally as well. They've done a lot of cost cutting mechanism that we've seen to actually manage the cost and drive down the cost and improve the margins.
Yeah.
So I think the business has quite seen a lot of developments, and that has paid quite a lot. And so happy as an investor.
Buy, sell, hold.
So I think right now at the peak, I think it's probably trim. You can trim a portion of your investment, just because the commodity pricing at all-time high, especially for PGM. So to kind of lock in that value of the pricing, you probably want to trim a bit of it. But for me, I'm going to hold it up.
That's interesting. Can you explain to the investors, is there wisdom in trimming?
Yeah, there is wisdom in trimming, because if you put in 100 Rand and your total investment right now is sitting at 200 and you take out 100 Rand, means that you'll never lose anything.
Yeah.
Even if that actually, so that's what I'm saying. So you lock in that high pricing, and then whatever happens from there is not your money. You have not lost anything.
Amazing.
Yeah.
Good stuff, my man. Good stuff. Only the best here. Only the best here. And this is all listed stuff.
Yeah.
Yeah. So number 2, we've got Discovery, 77.15. Mate, your companies are dominating the top 3. Yeah.
Yeah, I think Discovery has been working a lot about being a one-stop shop financial services.
Yeah.
And Discovery is very innovative in their approach.
Extremely, yeah.
And I think that for the bank reaching that profitability level has kind of improved a lot of sentiment around Discovery. And I think even the Vitality business as well, it's quite doing well.
Robust.
I think in the last reporting, they made about 41% return on just the Vitality.
Just Vitality.
Yeah, 41% profits growth. So you can imagine how impressive that is, right? And the Vitality business is not a very cost-heavy business, right? So it's a cash cow for them.
It is.
Right? And it's not just a South African business. It's expanding globally. And they've got that partnership in China. They've got pretty much the same thing in the UK as well. So you can imagine the amount of diversity that you find in one business, right? You find the bank, you find the insurance, the short-term insurance, and all of those things. And I think even just if you look at their PE ratio as well, I think it's a little bit ahead of the market to show that investors are now willing to pay premium for the business compared to the other guys like your Old Mutual and your Sanlam. Just looking at the diversity of the way Discovery is. I think that's what Old Mutual is trying to do to diversify. Hence, they've now launched OM Bank, and now they want to get into that. So I think in terms of insurance businesses, I think they're at a very unique position to actually compete in the banking sector. Pretty much everyone that holds data, because data is 100%. One of the most important currency that you can own, right? If you look at Pepco as well, they want to launch a bank as well. Why? Because they've got that richness of data. They've got ShopRite, if they come in and say they want to own it, to own a bank as well, they can achieve those level of scales, right? If you look at ShopRite's money market business, it moves billions of rands. But if it was a bank itself, imagine the fees they could charge, imagine the loans they could have. They understand the customer, they understand the market that they work in. So that level of competition I think we'll see in the banking sector. We're never gonna have, in the next coming years, I think we're not gonna have the top 5, top 6 banks. We're gonna have a very diversified banking pool, just of offering different products, right? And that competition also is good for us as consumers.
It's fantastic.
Because just the immediate fee for Standard Bank, I think it's about I think these are 30 rand or something. I'm like, that's ridiculous.
So with going back to Discovery, there's a piece that's missing. Yes, if the ambition is to be the one-stop shop, they've got the banking part, got the insurance part. I know a few years ago they tried to go into asset management, and it didn't quite work out. Do you reckon that's something that they should consider, like really have the full suite of financial services, so proper, robust investments?
Well, I think it's if the demerger of Momentum out of the First Rand Group is anything to learn by, I think it becomes a bit of a cumbersome regulatory wise to have different regulatory bodies that are applicable in your business. I think the way the business is diversified as it is, I think it's enough. Adding asset management and wealth management and all of those things, I think will potentially even cannibalize some of the existing business as well. In a sense that, yes, there's this element of cross-selling that they talk about a lot, especially on the banking side, right? That, no, I've got my banking side, I can just do all the Vitality things, so it's linked, and then insurance, they kind of do all these cross-selling things, right? But I think in terms of the other elements of entering into asset management, that's a different landscape as well from an investment perspective, right? I don't think it will be a good idea. I would think that maybe in the future it would, but right now stabilize the bank and make it compete and have its own customer base and see what you want to do with the bank. I think doing too much in a very little time can cause the whole entire business to come to the ground.
So like the reason why I raised it up, you mentioned that to be a one-stop shop, I'm thinking about Old Mutual. Old Mutual has got, especially now with OM Bank.
Yes.
They've got asset management arms. They just don't really call it Old Mutual Asset Manager, but they do have.
Yeah.
Then they've got insurance. So I was thinking that is where, and because they've done it before, they've tried it, just didn't work.
Yeah.
So I just thought maybe that is the ambition, isn't it?
Well, I'm not sure if the ambition is to be a full suite of everything. I mean, in terms of that landscape, if you've got a banking and insurance, you pretty much cover.
Here's the real reason why I'm asking you all of this, and it ties back into the economy, the South African economy. There's only so much. We saw it in. There's only so much available value, and especially with our growth rates, businesses have to think very creatively how they're going to generate new value. You can even look at history where you had these big conglomerates, your Anglos, which are in hospitality, which were in, obviously because of sanctions, they couldn't really go overseas.
Yeah.
But if local businesses are not willing to globalize, they are going to have to diversify their value proposition
to acquire further growth.
Just to acquire further growth. Like, for example, with ShopRite, it's either you go into Africa, yes, or you go into financial services.
Or you start a bank. That's pretty much how it is. Otherwise, your growth has been capped, right?
Yeah.
And because there's only, unless the population grows fundamentally, and then the economy, if the economy is still growing at 1% and below 1%, you're never going to achieve the 20% year-on-year growth that you've been doing in the past. So,
no, fantastic. Thank you for that. And then number one is Capitec at 178.22%.
178%.
I think there's much to add. Hey, as to
just the commentary on that on Capitec.
Yeah.
I saw their business banking is doing very well.
Yes, it is.
It grew from 2% total of the group to now contributing 5% of the total of the group.
So that's, as we're mentioning, robust businesses also, being robust is one thing, but also being agile is another thing.
Yeah.
What I've seen with Capitec, even some of the movements in leadership and even their hiring. I mean, a company's hiring philosophy can tell you about where they're trying to go. Hiring, the move from just banking and financial professionals to tech people. To data scientists, to software engineers. And that's where Capitec is doing a lot of hiring. I think they want to move from, not necessarily move, but they want to expand who they are more to a tech-driven business bank. Obviously, not forgetting the identity. Remember, we spoke a lot about identity. ShopRite has retained its identity. Having your identity as a bank, but the things that you can do, the people that you can bank, and how you can continue providing them services, I think that's where Capitec is thinking. And because they've got so much data, you can do a lot of things. You can do a lot of things with that. So, look, as it is, as a new entry point to Capitec, it is a little bit expensive.
It is.
So for people who are looking, price matters, mate.
Yes,
price matters in terms of determining what a good investment is. The price does matter. It's a little bit on the high side, but because we have it, I'm going to say hold.
And where do you think the growth drivers is going to be? Do you think is the Capitec management thinking expansion outside South Africa, or are they thinking let's focus on growing our business banking and then let's see where the growth is gonna land us?
I think outside of South Africa, well, okay, yes to all three or all two that you mentioned.
Yeah.
Outside of Africa, it's not necessarily going to be setting up banking operations. It's going to be through fintech plays.
Okay.
And it's going to be through partnership. Kind of like how we've seen them in Poland. We've seen them in Mexico as well. Poland, am I correct in saying Poland? I'll fix it up if I speak under correction. But I think that's going to be the thing in Africa. Okay. It's going to be through fintech. It's going to through payments.
Is it going to be a similar model that GoTime actually applies? Because GoTime has this partnership with retailers, wherein they put it in sort of a branch in a kiosk. One person ambassador that has a thing and then all of that. So is that sort of like, or is that mostly just going to be payment facilitation and all of those things? How is it going to work? Do you know?
No, but there's an AGM coming up.
Okay.
I'll go and ask the board.
Okay.
I will give you feedback as to, but for me, that is in Africa, there's no setting up of new banking operations because Capitec's banking operations is in the form of a branch. Very difficult to do that in Africa. But through partnerships and also not just a whole suite of actually banking, of taking deposits, but facilitation of payments. I think that's what it is. Here in South Africa, it's the business side.
Okay.
That is clearly the focus on growing that. And I think that's the dual strategy. And if they can implement it, it's going to be more growth because you do have that element of looking beyond Africa and fintech for the past 3 years. And I think for the next 3 years, 4 years, it's still going to be very hot in Africa. Yeah, that's our portfolio, bro.
Yeah, makes sense. I just finished It's About Time, the book about Time Bank.
I don't know it.
You don't know it?
No.
It came out, I think, about 2, 3. It came out December, I think. And then I got it, and I actually left it, and I was done with it, and I left it in a flat because I was reading, that flat sit pocket. And I just put it in there when I was done, and then I left it. I just got up and I left without actually checking the flight pocket. But what's interesting about it is it's how they operating, and in terms of managing cost, in terms of the customer cost acquisition.
Yeah.
And for me, that was a brilliant model, right? That model of having to partner with retailers, they already have existing infrastructure. You don't have to incur fixed costs. It seems to be working very well, especially in Asia. They are expanding quite rapidly in Asia.
Amazing. How big is Time Bank, bro?
It's quite big.
I actually don't know much about it.
It's quite big. I think in South Africa they've reached about is it 10 million customers? Yeah.
What?
Yeah. It's quite big. It's quite big.
Whoa.
I mean, how robust in terms of what the customer does with the bank is a different question.
No, right? I'm not asking that. No.
Yeah, but I think they've reached 10 million people in South Africa.
Amazing.
And that's probably quite a huge penetration in terms of bankable people in South Africa, right?
Amazing.
It's amazing. But anyway, I wanted us to chat a little bit about geopolitics and what's happening, right?
Yeah.
So what are your thoughts about this not Russia? We've spoken about Russia and Ukraine before. What do you think about Iran, US and Israel war and on the impact in the business and the global? I mean, what we've seen is that obviously what Trump is doing and acting has also affected a lot of the dollar value. It has depreciated against the rand. The rand has strengthened. Unfortunately, my salary is linked to the dollar, so so I've been suffering personally.
Yeah.
But what are sort of your thoughts around where you think about this war would have an impact in the ease of doing business and in terms of global?
So two things. The way that I think about it. I'm not a geopolitical strategist,
but you're an economist.
But yeah, no, but I am an investor.
Yes.
So I look at it in that lens.
Yeah.
The first one, obviously, is that those who have owned Sasol shares, congratulations. Congratulations. I mean, like you've seen what the developments in the Strait of Hormuz has had an effect on the price of oil. I think I read somewhere that in order for Sasol's oil business to break even, the price of oil must be at around about $50 to $60 a barrel.
It's almost double now.
Exactly. So if you just look at that in itself, that has been fantastic. It's been the main driver of the Sasol share price. Just some context for everybody. Last time I looked at it and I spoke to my mates about, okay, this is something that potentially, this was obviously before the conflict in Iran. It was at about 55 rand. Yeah, it's definitely not a 55 rand. Yeah, so I think that's the first and foremost. I mean, all oil businesses have done very, very well from a price point of view, the price of oil. The second thing which I'm thinking about is inflation. Because that has the potential to have a bigger effect on our entire portfolio, not just for financial instruments, but for everyday life in South Africa. We have seen the price of petrol. It's been very, very difficult. And now the next MPC meeting of the South African Reserve Bank, I'm not sure what's actually going to happen. We're going to see, obviously, with the inflation numbers coming out of Stats SA. But I won't be surprised if we not necessarily get a rate hike, but if there are more people within the MPC who actually support it, then I think not this one, then the next one. I think then it's almost a foregone conclusion. So inflation, it hasn't been good for inflation. It's been good if you have financial assets, but that's always the case, isn't it? And that's why you must listen to the Investment Candle podcast. And you must get involved, because that's how you protect yourself against some of these things where inflation affects everybody, but good performance of good assets can protect against that. That is what I have for you, mate. I don't have any geopolitical insights.
No, I think it's a very good take from an investor perspective, right? It affects all those indicators, including the rand and inflation, and I think that's what we've seen. And what happens, especially from a retailer perspective, with businesses like ShopRite, they try to pass on the inflation to the customers. So when you see bread going up by this much, is because ShopRite is saying, no, I'm not about to eat my margins. A customer must pay for this, right? And what the unfortunate part is that it never goes down. Right?
It never goes down.
It never goes down. So it always has to, something dramatic has to happen in order for inflation to come down. So I always tell people that food inflation and core inflation are two different things, right? So food inflation average in the past 5 to 10 years or so, it's around about 8 to 10%, a little bit more for some years, but it's about 8 to 10%. But inflation, core inflation, if you look in the past, it's been around 4 to 5%. In that midpoint when we still had the target, right? So you always have to think about the ripple effect of the inflation, is that it's also compounding, right? If they increase in 10% last year, this year is a 10% on top of the 10% from last year. So that's why within 2 years you might like, oh, the price seems like it's almost doubled. That's because of that. And the pricing differences as well is that the other guys are the price it differently, right? Especially even on the sort of like mid to high retailers, like your Checkers, your Woolies. The price differential with the lower side is not going to be the same, right? So the inflation there is probably even higher. We're looking at 15% inflation, right?
Dang it.
So yeah, but I mean, the demand is sort of like inelastic at that level, right? The guys are always going to buy. Whether a Lamborghini costs 3 million or 3.5 million next year, it's of no consequence. People are at that level, they're always going to buy, right?
I think that's when you have like a thing, going back to the investment side of it, like ShopRite, in that, because your value chain, you control a lot of it. Man, that's an advantage, especially now when you feel the pinch from a PPI point of view. You're at an advantage. You're really at an advantage. Yes, it does help that your competitors do half of the work for you. But also from a management point of view, this is when long-term thinking comes to it, in that you didn't foresee of these things coming down the pike, but you plan for them anyway. You plan for all eventualities. And I think it's unfortunate. Pretty good.
It's much like COVID. Who would have forecasted that COVID was going to happen, right? But it happens, and then business must adapt, right?
I read an interesting. Well, I didn't read the book. I listened to the interview. Lloyd Blankfein, the former CEO of Goldman Sachs. And his thing. This was years leading up to the great financial crisis in 2008. And he would go around to his managers, to his management team, and say, what as far as risk is concerned, tell me all the things that could possibly go bad. And then they responded to him speaking about probabilities, like this is the likelihood of this. He's like, I don't care about that. Everything that could go bad, what is it? And then they started managing for what could go bad. And I think that is a great manager, that.
Well, I mean, I think there's pros and cons about that, right? I mean, risk management is a very important and fundamental activity in the business, right? And that's why banks are very much regulated in that aspect, right? In terms of reserve ratios and all of those things, to make sure that the customers that they actually service, because if a bank collapses, it's a problem.
No, I agree with
you. It's a major problem.
But must see, what's the downside there?
So what I'm saying is that the downside is that if you over manage risk, then you're never going to take growth, right? Because remember, the higher the risk, the higher the return, right? So you always have to find that balance. Obviously, unfortunately, in highly regulated industry like insurance and banking, yes, there's that flaw that no matter what, you can't get over this line. But in terms of businesses and other businesses as well, like your retailers, like your tech and whatever, obviously you got to manage for risk, but also you have to balance taking risk in order to acquire that growth and return for the investors.
Agreed.
Yeah.
No, I 100% agreed. So I was looking at it from a business continuity point of view.
Yeah.
In that, like with management, thinking, I mean, just business, even just business strategy point of view for performance. I mean, who would have thought they're in Brackenfell? That's where the ShopRite offices is.
Yeah.
In Brackenfell, saying that, no, listen, let's actually take this investments on. Let's actually invest in vertically integrating. There is going to come a time where, so like that's what I'm referring to. Like, yes. Obviously, no, I agree with your point. There is such thing as
I mean, a management style is quite important, and that's why those guys are overpaid, right? To kind of manage the business and ensure that you're creating shareholder value, right?
No, I agree.
And not destroying it.
No, you're not.
Yeah,
bro. I wanted to ask you a question. And it's the reason why I'm asking you this is because I was asked that question.
Yeah.
About getting into the investment space.
Yeah.
On a formal level.
Yeah.
As obviously you can tell, it was probably a student who asked me this. And it was a student who asked me this.
Yeah.
Yeah. They're keen to get inside it. And it's difficult for me to answer because I am not formally in the investment space.
Yeah.
In my capacity, I follow markets on a personal capacity, not on behalf of my family. But you do it as both. You do both. Like what should people be thinking, particularly students? Do you have to do accounting? Do you have to do actuarial science? What is the pathway? What is the best pathway to get into investments?
I think the investment world is one of those discipline that is forgiving in terms of whatever in education background you have, right? It doesn't matter whether you're a doctor, it doesn't matter whether you're an engineer, it doesn't matter whether you're an accountant. I think it's forgiving in that sense. The only thing that is required is the willingness to learn and the willingness and the attitude to win. Because in investment, unfortunately, the attitude is about winning, right? Yeah. Beating the markets. If you're a fund manager and I'm giving you my money to manage on my behalf, I don't want you to give me all share index.
Yes.
Because I can literally just invest in an ETF.
You're going to get
tracks the all share index.
Yeah.
Now the all share index is above 20%.
Yeah.
If an investor tells me that they've done 18%, that's a bad year because they underperformed the market.
Depending on what fund it was.
Exactly. Yeah. So it's that aspect in terms of the attitude that you want to win, and winning means that you take risk and you manage risk in terms of how do you price for that risk, right? But let's go back to how you actually get into the investment, right? Maybe let me share a little bit about my journey as well.
Sure.
So I started my articles in auditing, fundamentally different to investments. What you do in auditing is fundamentally different to what you do in investments, right? Finance is finance for sure. I mean, I've got a background in accounting, the accounting CA stream, so you get to learn about these things. So valuation, whatever it is, you learn about all these things. But when I did my articles in auditing, it was all about positioning myself. Right. So my interest in investment picked when I was still in varsity, wherein we did the JSE investment challenge and all of those things. Right. But I didn't stop there. I started investing personally.
Yes.
I mean, I've started businesses as well, but also just investing as well in the stock market. Right. You learn by doing. Right. So if I'm giving someone my money, they need to have to sort of, I need to know that they have had the experience of having to invest using their own personal money and potentially have lost and taken the pain, right?
Yeah.
Then I can trust you that you know how it feels like, because you have lost some of your money as well in this aspect.
It's not nice.
So it's not nice at all. So it's about positioning yourself, right? So if you're investing personally as a student, right? if you can, I mean, I understand the economic dynamics of South Africa, right? If you're a student and you get $500, I mean, maybe not, but the learning still is there, right? Having to learn about following companies, creating dummy portfolios and all of those things, it will actually make you position yourself well in terms of how do you think about investment?
Sure.
Because the whole point about investments is about the thinking.
Yeah.
Right? How you think as a tech person, how you think as an investor, how you think, it's different, right? And you can only know how to think when you actually do it, right? And then that's how I position myself, because the thinking was there. I got that at least right.
Yeah.
When I walked in, I didn't even know how to actually model a full company because I didn't do that in auditing. I just audited financial statements, right? But in terms of my own personal thing, I used to drive my own value. Right, I modeled my own company. I remember the first company I modeled was actually MTN.
Wow.
Yeah. With their Nigerian operations, I think they had Iran at some point as well.
Yeah.
So having to think about all these geographies, what actually drive value for these businesses, that made me a strong candidate, even though I was competing with other people. One thing about investments is that it's highly competitive because your personal earning is actually linked to the performance of the investment and your investment decisions that you actually. So that's why it's a little bit competitive, because even sort of like your compensation can be astronomically high because you're creating value for them.
I've got a final follow up. How do you develop a mindset of, in fact, before we're developing a mindset, risk management? How important is that? Understanding, thinking about how you ought to manage your risk. Can be obviously in a personal capacity and in investment capacity. Can you speak a little bit about risk, and also what should students, and not just students, but those who are interested in entering the investment world, how should they develop that thinking of risk management, because it's such a key role in this world?
Yeah, I think there's a couple of things to think about risk, right? The first one is if the risk is inherent and you can't do anything about it, then price for it. So if I'm giving you a loan, right, and I want to give you a loan, but unfortunately you don't have any collateral, then I must price for that risk. So instead of giving you 10% interest rate, then I'm going to give you 20% interest rate. I'm not saying this is what actually happens, but I'm just saying that's how you actually get compensated for taking that risk, right? Because you can't protect on your downside by taking collateral for an asset. Secondly, can you actually externalize the risk in the form of, can somebody else take that risk on your behalf, i.e. insurance? Can you take insurance product against this thing, right? And thirdly, can you actually diversify for that risk? Can you take a portfolio view against that risk, right? That's sort of how you can manage risk. There's different elements and different approach within all those different subcategories, but on an overarching category perspective, that's how you would think about risk.
We're definitely going to clip that out. That's a clip. No, my man, I appreciate it. I hope for those who asked me the question, that was profound and understandable. My man, this has been good.
It's been good. I think one last thing before we go, I think would be, what is on your buy list outside of the portfolio that we actually are running on the screen? What have you been monitoring?
You answer it. Let me give it a think.
Okay. So I've been monitoring a couple of companies. I actually added Old Mutual as well. Remember the last time
based on the conversation
we had the conversation as well. So I added Old Mutual in my portfolio. I'm also now monitoring Sanlam as well. Just in terms of their JV they have with Allianz to expand that rest of Africa. I think Old Mutual is a turnaround business, just given the different efficiencies that they've been doing, and sort of like being cost conscious and on managing the costs and trying to improve the margin. So I'm on that. And another thing is I've been looking at the financial services a lot and how it has actually grown and changed and fundamentally changed. So I think First Rand has been investing a lot in Optasia. They've been buying Optasia like bread. I don't know what they're seeing, but I think the business is quite robust because apparently I didn't know that actually Optasia they actually back a lot of this business. Like airtime, they're the one that developed that system of facilitating airtime credits and all of those things. So it's quite.
I've been seeing the level of investment there. I don't get it.
It's quite powerful. So I'm following Optasia as well, since it's listed now in the JSE. Boxer as well is another competitor for potentially ShopRite. I think they've got quite good margins. They know the lower end of the market quite well. And the like. So I think I've been following that. Kumba Iron Ore as well in the mining space. That's one I've been following, but they've been complaining about stockpiling given Transnet issues. So they are pretty much attractive in terms of value, because you know that to the extent that they unlock that export and be able to sell the stocks, then you should get to very good levels. So there's quite a few companies that I've been looking at.
Wow. Yeah, I'll give you mine next time. Jeez. Yeah.
All right. But otherwise, it's been good, my man.
It's been excellent. Johannesburg, eh?
Good to meet up in Joburg, eh? But anyway, investors, please like, subscribe, and comment and give us a shout out if you want us to cover anything. And if there's company that you are not sure about and you want us to comment on it, happy to do 100%. That. And yeah, see you next time. Episode 22. This one is, yeah.
Thank you.
Yeah.